Hey, what's up guys? John here. March of 2020, the government put something into effect, a law requiring banks to have zero of your money in bank accounts. So banks had no reserve requirement. During that period, they dropped interest rates to record lows. Lowest ever.
Federal Reserve maintaining its 0 to 0.25.
Slashing its benchmark borrowing rate to near zero.
It is maintaining its current interest rate target at between 0 and 0.25%.
And investors were buying tons of land, building apartments just like the ones you see behind me. All over America, the big cities had 10, 20, 30, 50,000 apartments under construction. It was a build-a-thon. Apartments hit a 50-year high in apartment construction.
New apartment construction is soaring across parts of the United States.
Yeah, and real estate experts say it is now on track to beat, in fact, a 50-year high.
Builders are building homes and townhomes all over the country. And then something very interesting unfolded in 2023 with Silicon Valley Bank, and that bank collapse.
A rough week for the banking industry.
The collapse of Silicon Valley Bank.
The second biggest bank collapse in U.S. history.
It took just a day and a half for it to fall apart.
It pushed the Federal Reserve to open up something called the Bank Term Funding Program, where they lent out $161.5 billion to banks all across the country that needed it. Now, what's very fascinating about this is they let that expire on the 11th last year. Now they have 1 year from that date, which would be March 10th of this year, to pay back all of those funds. 70% of these loans issued on commercial properties, and these developments were issued by regional banks, most of which they saw a lot of capital flight. A lot of people took their money out of those small banks when Silicon Valley fell, and they put it into JP Morgan Chase, Bank of America, Wells Fargo, the big banks, thinking they'd get further security. But what's really unfolding and what we're walking into, I think, is what's going to reshape and rewrite American history, which I'm going to get into in this video. Today's video is sponsored by American Tungsten, but more on that in just a little bit. So these apartment construction, these projects that are popping up all over America, there's $1 trillion worth of these loans that are due in the next 10 months. Now, when you look at that $1 trillion loan amount, then you look at what these regional banks are going through, paying back tons of money to the Bank Term Funding Program. What you're going to start to see is a credit crunch, a liquidity crunch, and the retrade unfold. As credit becomes harder to get a hold of, what's ultimately going to happen? What are these properties really worth? Well, they're worth what the highest ready, willing, and able buyer is ready and able to pay for it. And so if there's less liquidity out there, prices are going to drop. And what I think is going to happen is I don't think it's just these big projects. I'm going to show you up the street here. There's tons of projects that are much smaller, on a smaller scale, that are 5 units, 10 units, 20 units, all across America. And these projects need to get refinanced either this year, the next year, or the following. There's $2.7 trillion that has to get refinanced from now until 2027. And so the entire commercial real estate market as a whole is $20 trillion. So you're talking about 10% of the entire market, the entire country, has to get refinanced that has loans. So it's a significant problem for a lot of these investors. Now, the great retrade, what I think is going to ultimately happen here is I believe investors are going to be able to acquire these properties at substantial discounts. And you think about it like this: if you're a smart and savvy real estate investor and you're walking into the great retrade, what are you going to do? Well, you're going to try to buy some incredible deals. And if you're really smart and you have a lot of liquidity, you're going to go out there and you're probably going to buy one of these properties and keep rents low for a year, maybe two. Put more pressure on your neighbors who own multifamily. Make them bleed out a little bit. And then once they bleed out, if you can try to acquire their property, you do so, and then you can increase rents. And then you'll have more and more and more pricing power, and you'll have a much greater return on your investment. And this is what I believe is going to be happening all across America. Inside of this great retrade, it's not just going to be in real estate, it's going to be across everything. You're going to see this literally hit every single industry, because banks weren't just lending on just multifamily and commercial and office buildings. No. They were lending on literally everything. And so how this all plays out is what I believe is going to unfold here is I think a lot of regional banks are going to be going under. I don't think they're going to be able to pay back the money that they borrowed from the Fed. Some of them will, but I don't think most will. And the reason for this is how the Bank Term Funding Program worked was that, let's say a bank lent $100 million on an office building, and that office building then became worth 60. Well, the Fed said, look, we'll give you the loan as if the property is worth 100. And they said, okay, great. The problem is the economy has gotten worse. Insurance has gotten worse. Vacancy rates have increased in most areas. Borrowing costs have stayed very high. And this put more and more and more pressure on these values. And so if the values if last year or the year before, they were in a worse situation, imagine the situation that these banks are in now, right? These banks are in worse shape, especially as more defaults continue to occur. And so when you look at projects like this one I'm going to show you right here, this is like a smaller project, but these projects are popping up all over literally every single major market in the country. And so look at this right here. Do you see that? There's tons and tons and tons of these projects that also need these loans. So what you're going to start to see here are these savvy investors stepping out, acquiring these types of deals. And this is probably 25 units, maybe a little bit more. It's probably about 25 units. But you're probably going to see an investor stepping in, buying, maybe not that one, maybe they're in distress, maybe they're not, who knows. But they're going to be buying deals like that. And they're going to be picking them up for incredible values. I have contacts with asset managers that are selling off assets, and they're selling them off right now at substantial discounts, portfolios, things like that. Just imagine what's going to happen as this credit crunch gets worse. As the credit crunch gets worse, these deals, these discounts are going to be unbelievable. And so here's what I think is going to happen here. I believe we're going to see investors all across America piling into things like gold, into things like land, into things like multifamily, buying small businesses. They're going to start to really invest heavily and take advantage of these discounts. And they're going to do this because the government's sitting in so much debt, $35 trillion in debt. You're seeing so many things unfolding across the entire economy, whether it be the situation that's unfolding with the federal workers, the conversations around tariffs, the conversation around, the geopolitical tensions that are unfolding. All these situations are pushing people to go into a place of, how do I defend my capital, and what's the best place to park it, and how do I grow and scale during the turbulent times, and what should I be doing? Versus, a couple of years ago, a lot of people were like, oh, I'll just hold my cash and, wait for the recession. The recession might be sitting in currency, sitting in dollars. I mean, we could see this inflation situation unfold and ramp up in a pretty big way, eroding purchasing power. And so why would anyone sit there and hold dollars over the next 3, 5, 7 years when there's going to be just insane values, just incredible opportunities to invest? Did you know there's no active production of tungsten on US soil? 100% of this critical mineral is imported, with China supplying 27% of it. Yet tungsten is essential for national security, used in military weapons, aerospace, and high-tech industries. Today I want to introduce to you American Tungsten, NASDAQ ticker DEMRF, which could become the first tungsten producer on US soil in decades. American Tungsten is advancing a past-producing mine that was once the 5th largest tungsten operation in the US, located in a mining-friendly region with minimal regulatory barriers. This project is positioned to restart production quickly. Despite this, the company is only worth $12 million today, while peer companies traded over $25 million. Why is this a big deal? Tungsten is critical to national security and classified as a strategic metal by the US Department Department of Energy. China controls 70% of rare earth production and 85 to 90% of processing capacity. The US has no domestic tungsten production, making it highly vulnerable to supply disruptions. The US Department of Defense and the Department of Energy are expected to support domestic projects to reduce dependence on foreign sources. China's already imposed export bans on critical minerals, further tightening supply chains. The company plans to engage in discussions with government agencies to secure strategic partnerships and non-dilutive financing. With 0 U.S. tungsten mines in operation and China tightening supply, American Tungsten could be in a unique position. This video is sponsored by American Tungsten, but don't just take my word for it. Take a look at all the details by clicking the link below and decide for yourself. Like, imagine being able to go out there and buy a building that traded in, call it 2022, for $5 million, being able to go out there and buy it for 2.1, 2.2, right? I think these types of deals are going to start to unfold and happen because you just look at the clear fundamentals. Borrowing costs literally doubled. Insurance, look at what's happening in California. Look what happened in Florida. Look at what's unfolded in all these different pockets of America. All these insurance problems have been popping up. This is going to push on to the cost to service that asset, alongside vacancies continuing to grow, and businesses are going to continue to cut office space and remove, and really employees are going to have less of the ability to live in an expensive city. People are going to be relocating. All of this is problematic for an investor that bought in the hot market, at the hot period of the economy, where everyone just wanted to be. You know, these people are going to be, I think, taking big losses, and I think it's just going to present a major opportunity to go out there and acquire deals. But the key is, what should you acquire? Well, I think there's going to be a lot of opportunity in multifamily. I think there's going to be a lot in precious metals long term. I think there's going to be a lot in, kind of what Trump is doing right now in America, and a lot of the, these new policies and these big changes that he's pushing forward. I think there's going to be a lot of shakeup unfolding, but where you want to be is in assets. You want to be in production. You want to be in a place that's going to benefit from this chaos. What you don't want to be in is high interest rate consumer credit card debt. You don't want to be in a situation to where you're paycheck to paycheck, and you definitely don't want to be in a position where you need to refinance a loan over the next year or two that, if you don't get that refi, you go under. A lot of people are going to be in that spot. Remember how many people are marrying the house, dating the rate? I did a video when everyone was talking about this. Oh, marry the house, date the rate. And I'm like, that's a dangerous situation to commit to, because interest rates were the lowest in history. And for people to think that rates are going to go back to that level over the next 6, 12, 18, 24 months, that's pretty risky, especially considering that the national average for interest rates are, right around 6%. And back then, when people are saying marry the house, date the rate, rates are about 6%. That was the average. So many people are leveraging themselves to the gills into these properties, and now they're in a property that they might not be able to hold on to if insurance goes up, if the cost to service and manage that property goes up, or if they lose their job, right? They're really leveraged. This is an incredible time to grow and scale a business. It is an incredible time to cut expenses, and I believe we're walking into the best time ever in American history to go out there and invest. If people thought that it was expensive, a year or two ago, or even now, to live, I think it's just going to continue to get more and more expensive. But I think the opportunities for those that go out there and get it are going to be greater over the next couple of years than we've ever seen in our lifetimes. Like, there's so much disruption, there's so much shakeup across every industry. Tech, like literally every single industry is getting shaken up right now, and it's going to present opportunities for people to go out there with a net worth close to zero and turn it into millions. People that are worth millions turning it into billions. I think we're going to walk into the first trillionaire over the next 3 to 5 years. All of this is just going to continue to grow, and the opportunities will grow for those that are after it. What do you think about this entire situation? Let's have a conversation about this below. And for more information on today's sponsor, you can click the link in the description just below this video, and I'll catch you next video.